Right. Good morning. It's 8 a.m. on November 12th, Veterans Day in the U.S., the day after Armistice Day, 100-year anniversary of the end of World War One. And this is the Gold Fix. The title of today's post that accompanies the broadcast is Doom Loop to 1150. Now, a little bit of a sensational title. I don't really get into the post itself, but the point is we are at a level now where I feel, and more than one technician feels that uh, new lows are on the radar. Now, I wouldn't uh, uh, handicap this as more than say 20% uh, for two reasons. One, I think we have to get up below 1189 before I start really uh, saying 1150 is on our radar or lower. Two, we are coming into the end of the year, and that means uh, 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 that puts a variable in that is potentially very bullish. A lot of times, funds and funds will, a lot of many hedge funds shut down at the end of November to avoid an end of the year shutdown. So they kind of close their positions after Thanksgiving or heading into Thanksgiving, and they start their trading activity in December, or maybe a little bit later. The point being is they avoid the end of year rush of everyone closing up positions. Closing up early is actually a wise thing to do, and I would think that's probably happening more often than not this year. So if you have end of year liquidations traditionally that people used to follow happening in December, they'll happen in October and November. And conversely, when you have allocations of fresh money, banks saying buy gold, or banks saying we want you to put 5% of your money in gold and 10% in oil and 30% in Apple and 100 more percent in Facebook. Uh, you get those allocations start to come in, and those allocations uh, uh, typically come in. And this is important. Macro is important now because uh, 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 macro cash flows, not macroeconomics um, or global. Uh, what's happening now is you're going to start seeing, things that aren't usually dominant in the market. They'll start to assert themselves. So one of those things would be funds have closed or are closing positions, many, not all. And banks are starting to put out their 2019 recommendations, which we put a post up on yesterday. Credit Suisse was the first one that came across our table. And uh, uh, the path basically goes like this. The glide path is analysts make recommendations, your top 10 lists, basically. And then salesmen recommend, go out and actively recommend them to clients. Some clients with passive money, uh, 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 passive meaning their money's passive, but CTAs um, manage their money for them, or fund managers or private wealth managers. They will just basically jump into that concept and say, okay, well, if Goldman says do X, Y, and Z, I'm going to do X, Y, and Z. You can criticize, or compliment that, but that's what happens. And typically, what happens is if prop trading firms that have the information, there are levels of customers. You're either a good customer or a muppet, and and there's lots of levels in between Muppet and good customer. But the best customers, like I would say, Swiss National Bank that sold their Apple before Apple sold off. They probably have uh, the good research that everyone gets when it comes out. And uh, on the same note, if you're a prop desk at a firm, or you're a prop desk that's a customer of a bank giving recommendations out, you're going to have an opportunity to position yourself. It doesn't mean you're doing anything illegal or unethical, well, although I can argue the other side of that. But if I'm a prop firm, trading my own money, hedge fund, and I see that Goldman is going to recommend buying, Facebook, uh, I have to make a decision. Uh, First of all, am I bullish Facebook? If the answer is yes, then I'm going to be buying myself uh, because I also want to get in before everyone else drives the price up. And also, even if I'm not bullish Facebook, I may say, well, there's a trade here, and I'm going to buy it, and people are going to buy it behind me, and I'll surf the wave. The risk in that is reputational, in the sense that if the bank giving the recommendation is reputable, then people will do what it says, and you can make money. If the bank, however, is not reputable, or if the bank has reputation of doing that every year, and it's already discounted in the market, almost like automatically, then you might not get the pop you want. So there's risk in those type of trades. What I'm getting at here is we're coming into the end of the year, and because we're coming into the end of the year, you should note that you're going to get allocations soon. And so the thing that would uh, make me the second thing that would make me less uh, uh, what's the word I'm looking for, less convinced that we were going to make new lows on the contract is the fact that you have end of year allocations. And although not universally, but consistently, the market, relatively consistently, the market makes lows, uh, uh, a low, if not the low, near the end of the year, and then starts to rally as money comes into it. So let's go through that. Uh, let's go through the rest of that now that I've explained the title. All right. Friday was a great day for bears as gold finally capitulated to US dollar strength. Those of you who have been listening and reading the Gold Fix content understand what I'm talking about. If not, search and learn. D's Gold closed $14 lower, settling 12.1030 after putting in a low of 12.720. Okay, those are the facts. You have to put those out there. People have to read that. That's the structure. That's yesterday, meaning Friday. And there's a chart. That's the D's Comex chart. Let's move forward to today. The U.S. dollar is up against most major and emerging market currencies with cable. Those of you who don't know what that means, cable is the British pound leading the way lower, I should say. As of this writing, spot gold is trading 1207. We'll see where it is in a second. Um, down about 250 in a range between 1212 and 1204. Difference between spot gold and D's gold is about a buck 50. They're converging as D's comes off the board. Given DX, that's the dollar index strength, trading 97.40 this morning. That doesn't seem like a big drop, but when you look at it in a 2 day performance, adding in Friday's performance, there's clearly nothing to be bullish about. Today, data on deck, Veterans Day. The economic calendar is light. U.S. Veterans Day holiday means that traders will not have the cash treasury market for price discovery. What does that mean for gold? Doesn't really mean anything for gold directly, but it just means this. If you're trading today and you have a big position, you're going to move the market because there are less players playing, at least on the U.S. side. Gold is an international commodity. So I would say when Europe drops, when Europe closes down, you're probably going to have a lot less liquidity on the U.S. side. So look for possible volatile moves in the 15 minutes before and after London goes off. Okay. Uh, Okay, Veterans Day. Okay, so today, San Francisco's Fed President Daly gives a speech late in the session on the U.S. economy. Market participants are still trying to locate her on the hawk dove spectrum, which is what you would do if you were floating a person out there. If people don't really know about her and they want to learn about her, you put her out on a light data day on Veterans Day, and where she'll have a muted effect on the market. That would be the rollout of a new product, so to speak. Yesterday's trades, Friday's trades. We have a little picture there. The trade Friday was to get short below the levels prescribed. I'm not sure what the right word is, but I put in proscribed and sit on your hands. We said that. We said it. We wrote it. We said it. We wrote it, and we didn't do it because we weren't permitted to by our own rules. But here's the picture of that spot daily, high quality levels. So in that post we said get short below those levels for a daily signal. For me, that means get short, and you can only get short at the end of the day. So you miss $14 of the move. There were other things that could have gotten me short sooner, but I wanted to wait as it was a Friday, and if this is a good signal, then we're going to have a lot more room lower and I'm looking at possibly selling the market today, as crazy as that sounds. In Friday's broadcast, we also noted that while this was is what I just said. While this was a high quality signal, it was one where we could not get in until end of day if we were to play by our own rules. Had we been more aggressive, which is something that we like to do, that I like to do, trade more aggressively, or if I see a signal coming but not there, I deal in probability. So there's a 50% chance that the signal is going to close uh, with a green light. I'll put half the position on, uh, but I did not do that yesterday. I did not want to be. I couldn't give 100% attention to the markets, so live to trade another day. Had we been more aggressive, we would have put on a smaller trade. We would have put a smaller trade on upon breaking the levels above and added at EOD. That would be end of day. Other money. Okay, there's a lot we could say here, but we're just going to put it very concisely. Brexit on people's minds in Europe as the euro and uh, Great Britain pound, German, British pound are weak. Politically, we are seeing voices from the wilderness like Boris Johnson start to weigh in, and this serves to increase anxiety. Plus, there are deadlines coming up, and I know there's a lot of fatigue in discussing it, but uh, uh, there's been a bit of a change in urgency, and I think that's just basically people going back to business after the whole World War I memorial. Tape reading. All right. China again did not intervene in the yuan market last night. I've been talking about this for a while. That makes for 5, I think, days with no meddling. We made it clear that as China saw ineffectiveness in monetary action to offset tariffs and move toward fiscal action, as in lowering taxes or uh, uh, easing restrictions on loans, this would be more likely. The yuan aspect, the monetary aspect, really wasn't doing much to offset. But we must note, even though that we are right thus far about that, we must note that it is prudent to not do anything to upset the Apple. It wants to capitalize Apple because it's got Apple the stock on its mind. Tell me that these things are not manipulating thoughts, these script things. But that's another whole conversation. Upset the apple cart in front of the meeting between Trump and Xi, however you say the gentleman's name. But the point being is, if China is potentially always being labeled or demonized a manipulator of currency, and let's face it, what central bank isn't? Uh, if you were going to go back to uh, uh, debasing or even strengthening the yuan in the market, it would be smart to wait until after your meeting with the United States president on trade. Give him every opportunity to come to the table, protect him against himself, if that's your perception. At the same time, you can say the Chinese are uh, laying in wait to keep bullets to use if they don't get their way on trade meetings. Anyway, who doesn't do that? Okay. Um, Therefore, it is on our radar that if China were to devalue again soon, it would be likely after a failed meeting. This should add further pressure on gold, but not necessarily in a knee-jerk reaction. Also, please remember that we believe that gold and the yuan are in a trading range pseudo peg uh, 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 on a week-to-week basis. A stronger or a higher yuan, meaning a weaker yuan, say above 7, is not bullish gold. It's not necessarily bearish on a tick by tick basis, but it will assert itself as it has been. Um, this is just suggests a trading range. Okay, so I just said that. Technicals. All right. Uh, Michael says if you're looking for your technical numbers, you start with the upside, sell against 12.1340 to 14.50. So we'll just middle that. 12.14 and below, and then go downside below 12.07. So 12.13 to 12.07, 12.14 to 12.07 is the range that he's showing, and inflection points below. If it gets back up to 12.13, sell it. 12.14, consider reversing above. Go back into the downside. 12.07, 20, 12.06, 70, 12.07, 20, I think was the low on Friday. Look for that as a support and resistance level. And for people that are not familiar or not comfortable with technicals, I want to put it to you this way: if gold makes a low of 1207.20 and then rallies a dollar, and I buy it because I'm bullish, what's the logical place for me to put my stop? Rhetorically speaking, that is below or making new lows. That's why numbers become important, because people start stacking up orders in there. So you could see stops below that. Time is 8:15 Eastern time. Buy against 1201.70. Okay, fine. If you're short for a decent bounce, get short that below and decent penetration. And I would note his number here: if we break below 1186.60, 1184.30, or even just below 1186.60 and back above, look, we're coming. So I'm basically saying below 1189. He's saying below 1180, 1184. So between 1189, if you want to combine our disciplines, and 1184, that's a dead zone. So below 1184, you could be short with a stop at 1189. Above 1189, you could be long with a stop at 1184. If we get to that point, uh, and then he's got some serious numbers there, and you'll note he brings in 1167.10, which was a low before. A low, I think. Larry called on Twitter. When I say I think, I mean I know. Today's volatility based system and regression to the mean levels. There's a dollar index for you. Uh, it's just going to keep going up until the United States figures out that it can't, until there's $1 left in the world, as we continue to drain, and that dollar is chasing us a share of Apple. Um, Gold daily. We're looking at spot market now. We're into the second day of basically a 2 to 5 day signal. Uh, you could, I don't, but you could sell rallies uh, up to the 11. I'm sorry, up to the 12 uh, 20 level, and I say that because you could see a 2 day bear flag. We could rally a couple days and then sell off. And that would be consistent with not only the signal, but how technicians look at the market. I won't. I would be the type of person who should be selling it right now with a stop at uh, probably, I'd have to look at it closer, but the stop would be probably 1213, which is actually close to Michael's stop level. Okay. Gold on a 60-minute level. It's inhaling right now, meaning by that it's pausing. I'd say in the next 3 to 5 hours, we'll see. We could see another move. Which way, I don't know. On the 4 hour basis, interestingly enough, we really didn't have a signal go off. If you look at that top line, it's kind of flat, uh, uh, which suggests that the top line is going to come down if the market moves sideways. And from there, who knows which way it's going to go. Um, I am missing some material here. All right. What am I looking at? I have more material that's not showing. Oh, that's sad. Okay. Well, my mining information is not showing. That's kind of annoying. Why don't we do this then? Uh, I know that I did this. I promised we would start discussing mines. So why don't I just pop the pictures up? Um, that's disappointing, disheartening. But yesterday we put out a post on Credit Suisse's recommendations. So we're going to start light today. Metals and mining. These are the top three picks by Credit Suisse to outperform for the year. If you're an investor as opposed to a day trader, you should note that in their top three picks, there are no gold miners. The first one is graphite uh, related. The second one, that's a graph tech. That makes sense. The second one is a coal company. And the third one is, well, I don't know. That could be. It could be precious metals, but I'm not a big follower of Constellium, but I could be. It's not a big deal. Uh, but there you go. There's the beginning of us giving you a little bit of mining stuff. That'll include charts and more in-depth analysis. I can talk more about it, not just give you charts. But I wanted to start out light today. Today is Veterans Day, and there's been something circulating on the web, uh, uh, especially in Twitter, and I want to point it out to you in honor of the veterans. This is a group of veterans. There's 1st Battalion, 79th Queens Own Cameron Highlanders. Photograph. This is I'm going to show you a doctored photograph for dramatization purposes. Basically, 1,000 men went off, and after the war, 27 came back. Now, it's a doctor. The second photograph is doctored. Basically, the first photograph with, uh, people removed or cut and paste, but the numbers are accurate. About 1,000 men, uh, and three, I guess you call them leaders, or come back with about 27 soldiers and one. So keep that in mind. Uh, uh, in remembrance of Veterans Day, I have family in the military, uh, and my grandfather fought in World War One in Italy on the Italian side. Um, let's take a look at the markets before we go. All right. Dollars trading 97.36. Gold is 1205.20, below 1207. So between 1207 and 1201, you might want to consider being short here with a 1201 area as a level to cover shorts. If you're short here, I would say put your stop above 1207, 1208. I'm not going to be particularly aggressive today, not because I don't think there's opportunity, but because I think it's something I can't set and forget. I have to pay attention to the market. I will be in the chat room, but more for conversational and education purposes, and I'll be putting out some stories as well today. Please note the rest of the metals are down, but they were down more on Friday. So let's see how that goes. Uh, Quickly, let's look at the other markets, and by that I mean uh, global markets. The 10-year bond yield is lower. I think we're going to continue to see um, stronger dollar and lower yields. Um, when we do see higher yields, I think the next time we do see higher yields, we're going to have another stock sell off in a big way, but I don't know what that number is. All right, so Asia's mixed. Europe is lower. The DAX and stocks and FTSE are lower, which is consistent with Brexit anxiety, and Italy hasn't gone away. We're looking at the Nasdaq, the Dow, and the S&P coming in lower. The VIX is higher. That may seem 4.49%. We're talking about a percent of a volatility percent. So 4% higher is, what is that? 8, 8, 16, 24. It's like um, 3, 2%, 2%, 2 percentage points, which is, nothing to sneeze at. Brent and crude are actually the focus today. OPEC having cut production. You have a bounce in crude. People that are saying that there's no one playing crude. That's not true. The funds have actually quickly, I had the commitment of traders picture somewhere. The funds have actually quickly reversed from long to short. It's not to say they didn't get hammered the first leg lower, but now the funds are all short. So maybe that's time for us to go up and stop them out. Bitcoin, dead on arrival, but that's all part of the master plan. Talk about that some other time. Um, I think that's it for today. So apologize for the post being uh, truncated like that. I have everything there. I don't know why it's not rendering. Uh, but we're working with a new format. As you can see, the pictures that did render, I will take a bow. They're actually a normal size. Um, but it's 8:24, and I have to get ready for the AM roadmap. Stay with us on this trading day. Uh, could be a good day uh, for trading stocks, because if some players aren't in and you're trading smaller volumes, you're not George Soros, you won't have any liquidity problems, but you will have volatility. So enjoy yourself. Have a pleasant day. I'm Vince Lanci, and thank you for listening to The Gold Fix.